When it comes to stock markets, there is never ever a dull moment. But today, when we look at Indian stock markets, we are seeing things that we have never seen before. And most of these things are more confusing than convincing. First of all, India is on a fantastic economic growth trajectory despite the global volatility that we are seeing. But foreign investors' stake in Indian markets is at a historic low, in fact, at a 12-year low. Secondly, there is a huge amount of money that is coming through the retail investors in terms of SIPs, which is unprecedented, but their patience, their investor sentiment is being tested because of this current volatility. Thirdly, there is a huge amount of money that is being raised by way of IPOs, companies coming and tapping the markets, but most of this is because of exits by private equity or promoters, not to power growth. Amid all this chaos and contradictions, the one thing that is really stands out undoubtedly is the robust regulatory environment, the regulatory ecosystem that we have created in India. Today, we are privileged to have with us the Chairman of the Securities and Exchange Board of India, Tuhin Kanta Pandey. I'm Mahalakshmi and I'm joined by my colleague Brajesh Kumar to do this interview. So thank you so much for this opportunity. Mr. Pandey. So let me dive into a question that is on every investor's mind today. You know, this foreign investors selling, which has continued for quite some time. We understand that you just went for the ISCO meet. You also met up with with a few of the large foreign investors. What is your sense? Is there something regulatorily one can do to arrest or stem this outflow of money from foreign investors?
Well, first of all, I would say that if you look at the data, then last 5 years, net $58 billion FPI's foreign investment has come in both debt and equity. So therefore, I mean, the phenomenon that you are talking about of FPIs going, it was basically post September, October 2024. And of course, substantial FPIs went away. And again, you see last few days a reversal of this trend. Now, in effect, there could be several reasons for it. One could be, the level of market itself and the corrections. I mean, people said about valuations and the profit booking. The other point was also China versus India at the time, emerging market, like China was available very cheap and some of them had started gravitating there. Another level of uncertainty has come in because I think prior to this new administration, during the election campaign itself, there were certain doubts which were created, how the US stance would going to be going forward. So normally in these kind of uncertain global situations, you have a tendency of the foreign investors to flock back to the place where they come from, largely US, they go back, and the dollar was also very strong. So therefore, there are several reasons why the FPIs behave the way they should. However, it's also a fact that 5 years there has been net $58 billion of this. And overall, we are talking of FPIs of the order of $800 billion, both on equity and debt side. And there have been plenty of movements, positive movements on the debt side. While on the equity side, there was also some negative.
Right.
There were also positive movements on the debt side, following the bond market inclusion and other issues. My sense is that FPI's view of India is very positive. In fact, it was more than my expectations during my visit, how deeply the FPIs are valuing India and India's growth story and look at the medium to long-term prospects and also short-term, in fact, in Indian economy. I think they realize very clearly that, India is one of the fastest growing economies among the large economies, has a very solid fiscal consolidation path laid down, Current account deficits are well under control. The balance sheet and the bank balance sheet and the corporate balance sheet have been stronger than ever. There have been slight dip in the earnings in the micro level,
right,
but they have started stabilizing too. And despite global headwinds which are affecting all countries, including US, where India still has been one of the more attractive markets for FPIs, because of these fundamentals, because of the resilience that India commands. So that's the sense I got. I think
right,
they seem to be extremely, but this engagement process that we have done with the FPIs as well as others, industry and other participants, that has, I think, been very much, they have welcomed it in terms of dialogue and discussion and engagement process that we want to do. And I think it's a good learning process for us also. So in fact, there is a number of steps which the SEBI has taken in case of FPIs. There is an FPI outreach cell which has reached out to about 2,000 FPIs for trying to engage with them, to explain them what has been going on, and also redress some of the issues they might have. The common application form of registration, the number of issues relating to that have been streamlined. The registration process on the average is now about less than, it's about 30 days. It used to be at certain point much higher.
right.
All the cases of 200 odd cases which were pending for more than 4 months, now there is no pendency of such cases, at all. So all of them have been cleared. So registration process has become much faster. Some of the issues that they may have, they have been tackled. So of course there is also scope for further improvements, and I think those point has been made. I mean, we have really reached out to them, said if they can also come in and dialogue and make suggestions where they would have. So I think the mood has been very positive. This was my sense, not only with the 5 meetings I have, where I met plenty of FPI investors in Washington DC, in New York, in Boston, but also there was a very positive things about India in the meetings that we had under the Financial Stability Engagement Group, under the IMF ISCO track.
Sure. So what is the nature of these 2,000 FPIs you're talking about, to whom SEBI has reached out to? Are these investors who were investing in India? Have they moved out, or were they waiting to get registered? What kind of entities are we talking about here?
See, normally, that is not the way it happens. People actually keep on modulating their investments. I mean, in terms of, you would not have really very many people who are completely exited.
Right.
Of course, nothing stops from exiting if they have, suppose some fund is there and that fund is wound up. In fact, one of the important problems that we have sorted of, what to do if they have post-registration, if they have a problem of liquidation of illiquid securities. So that was another problem they would have, and we have given the guidance how they can actually do that post-registration also. Right. So I believe, we have met all kinds of FPIs, and the general mood. And one of the meeting we had was organized by the under the auspices of CGI New York, and we had a number of questions, and but generally I think they appreciated the engagement process with FPIs, and we continue to remain engaged.
Sure. So now one big picture question. During the past few years, especially under your predecessor, a lot of things changed in SEBI. The speed of change in the regulatory landscape, the surveillance, the enforcement, investigations, everything was in a sense on overdrive mode. Now, as you assume office, what is your big vision of what you want to implement over the next 3 years, or what are your regulatory priorities?
I think my priorities are in fact the SEBI's priorities under the parliamentary mandate. So it's not really,
which at this point in time is
in
what?
one sense, personal to me as a chairman. But we are a creature of the Constitution. We are also a creature of parliamentary statute. And we have got three mandates. One is that investor protection. The second is the development of market. And the third is a regulation of market. Now, these three things are important and they have to be balanced. Because to some extent, if you have a good development of the markets we require, you need to have a regulation. And that regulation also need to see that we protect the investors. However, if we have a regulation which is excessive, it may impede the development of the market.
Right.
So so what we have really to say, the balance, how do we strike a balance between a regulation which is just a bit too much or a regulation which is just too little. So that is the word, I use the word optimum regulation. And if we are able to do that, we basically try and balance the two imperatives. And that will mean that more engagement, more co-creation, and a pace of change which will be conducive to development of the market in an orderly manner without really putting too much of a stress on the system, because we do understand that every regulation also puts a burden, compliance burden on this. So while we might have contextually a need for certain regulations in a certain context, we might also in the same breath also eliminate some of the other regulations and not add up to them.
Right.
So there could be a situation where you can sort of keep on sort of contextualizing your regulation, but at the same time keep on eliminating which are really no longer necessary and not really add on the regulations. So the cost of compliance and the cost of and the ease of doing business are imperatives also equally important, while no longer ignoring the risks which might be there. So we have to mitigate the risk, but in the least cost way.
Sure. So another very heartening thing about stock markets in India, at least in this cycle, is how the domestic investors have really taken to Indian equities. It coming directly, it is also coming through the SIP route, which is very, very healthy. But the flip side of this, as many fund managers also have been pointing out for quite some time now, is that it tends to create asset bubbles. It's something SEBI also pointed out last year sometime. What is your view? Is there a way in which SEBI can sort of do something to regulate asset prices so we don't sort of bubble up, boil up, and then there is a big meltdown?
I really don't think that is a SEBI's role. I mean, we will be, if we interfere too much in the market making process, it may not be healthier for our capital markets. What we really need to do is to enable a process of capital formation. While India has a very big opportunities at this point in terms of the demographic transition we have, the quality of entrepreneurship that we have, and the banks and other institutions willing to support and lend a helping hand. And in capital market, the investors which have grown from 45 million in 2020 to 130 million today. And we have FPIs who are, sort of quite positive about India. So we have all the wherewithals where, a lot of companies can come in, a lot of capital formation can do it. Supply chains, India, sort of many supply chains are shifting to India. There's no reason why so many unlisted companies can get into the listed space and enable, new papers. And that's important. In fact, last year, we have about 4.5 lakh crores of issuance in all kinds, IPOs, FPOs, QIPs.
Right.
So, there were about 6 lakh crore, which was, ingress to the mutual fund industry. So therefore, this is important, that while the investors are coming in, the issuers are also coming in, and that is what, you have lots of papers to do. And then lots of investors also to support that paper.
Sure.
And of course, everything depends upon, you have to also keep a healthy balance sheet and the corporate earnings must continue to grow. The opportunities that 6% plus growth rate, which India is right now clocking, and infrastructure funding, which continues to be in fairly high level at the government, provide the wherewithal for this kind of a nice capital formation to handle, to take place. So therefore, I think both the sides we have got the merits.
Sure.
And so therefore, the possibility of asset bubbles happening then will be, will get diminished.
Right.
Because if you have more papers which are there. Now REITs and InvITs have also come in, where several, new something. We have also brought in SM REITs. I think we have to enable more and more products. Now specialized investment funds have been brought in.
Right.
But eventually, it has to get into the real market economy. That's important.
Right.
And in order to have a real market economy, we do have the, all the enablers. So I would say that this is one of the best times then we can actually have a very growing capital market in India.
Even the specialized investment vehicles, all of it goes into the equity market pool. But of course, there is REITs, InvITs, which are completely different products. The underlying assets are very different. In the next 3 years, which pieces do you think can grow substantially? Your predecessor again was very bullish on REITs. Any particular thrust area that you would see over the next 3 years? Is it muni bonds? Is it REITs? Is it InvITs? Is there any other thrust on commodities?
I think we are in a state where we need all of the above, because we can't really be saying that this will be the only class. You forgot to mention debt markets.
Right.
So the debt markets also, this is continuing now following the inclusion of India in the bond index. That you have, you will have the debt flows, which will also come in that significant debt flows. Also, I think as a part of asset allocation exercise, which the households as well as the institutions do, a lot of money will also get into the liquid funds and the debt funds, as well as the equity. And in the equity, then you have hybrid securities.
Right.
And then we have alternate investment funds where slightly riskier investments could actually take place. We have recently also allowed, the AIFs can go for even some of the listed securities wherever we were making them only go more than 51% for unlisted ones. We have relaxed the provision so that even the bond market develops, and the bonds which are listed AAA and below and AA and below may also be subscribed by the AIFs. So I would say that it's the diversification of the market and all the markets actually combining, because they are suiting different needs and different class of investors.
Right.
So we should also not have one size fits all approach to regulation. Even the investor protection, our thing, we have to apply differently for different class of investors.
Right.
While we may have a separate thing for retail and small investors, in some of the AIF classes, we may have where the capacity to take risk is much more, where they are much more aware about the, as I said, about the capital markets. There, I think we can have a much less, regulation.
Right.
From the point of view of investor protection.
Right.
So it is that variety that we have to add, and I think the SEBI has been, has been recognizing this issue, and they have brought in different kinds of regulations, and we will continue to reform these regulations also in order to bring about different products, different instruments, and different types of regulations.
Okay, another question on the mutual fund industry. Of course, this mutual fund Sahi Hai campaign has worked wonders for the industry, but there is also a feeling that it might have been oversold, in the sense that there are a whole bunch of breed of investors who are investing in equities without knowing the risk of equities through the mutual fund route. Do you think it's time for a change of tack, in a sense that, how do we address this issue that mutual funds with underlying equities may not be for all investors?
But mutual fund itself will provide all kinds of varieties. So let's not say that mutual funds can only provide you equities. They can provide debt securities. They can have hybrids. Even, for example, this...
They do.
In
It's
fact,
just that the thrust seems to
yes.
have been on equities all this while.
No, but the equity capital is also an important capital, because, you know, in a situation where you have to build large companies, where you need equity. So therefore, some people should be able to raise equity from the market. So there's nothing wrong in equity. I would say that it should be consistent with the risk that have. So if you are, it's basically the attitudinal change which has come, and to some extent which should also come further in terms of long-term investing.
Right.
If you're doing a long-term investing, what matters is the macroeconomic fundamentals. What matters will then be, the state of the real markets. So it's not a merely, a little cyclical thing that you will be worried about. You can ride through the cycles. When you are, say, invested in 5 years, if you stay invested for 10 years, you actually ride through the cycles. So you don't get perturbed and you don't get panicky on some downturn. And in fact, some downturns in the market are essential part of actually market making, because sometimes you should know, it makes you aware of number one, risk, that is a risky market. Secondly, it also allows people to average out. Some cases, it will also allow you to get in at different price points. So it would be, we should really say that if we understand the market, what matters is what is the India's next 2 decades, how is the India, going to grow? What are the, points, what are the savings and investment ratios that we have? What is level of productivity? What is the infrastructure? What's the infrastructure story in India? How much has been done? How much has efforts been made? What is the policy stance? What is the demography of India? What is a talent pool? Now, if you really look at the capability centers, the global capability centers, almost more than 50% of the world's global capability centers are today in India.
That's right.
And one of the very important takeaways I had during my US visit was every, FPIs, particularly banks, big banks, were, even though they were not really participating in banking operations as such here, they were heavily invested in Indian talent pool here. And somebody having a 20,000 manpower in India, 40,000 manpower in India, and running global operations, bringing in even very high positions into India in terms of managing from the globe. So now that itself also creates a whole lot of other opportunities when you have such comfort level, whether you are running your global operations from Chennai or Pune or Mumbai or Bengaluru, Hyderabad, and even increasingly in the tier 2 cities. So that itself creates a lot of goodwill in terms of how you are looking at it as a country's long-term future, because you have in a way placed so much of trust that you are running your operations from a country. So these are the enablers of the long-term growth of capital market, the real economy.
Sure.
So investor protection is the key mandate of SEBI, and for that we need investor education. So what is your plan? Like last year the spend was very minimal, even less than 5% of the SEBI's own investor protection and education fund. So how you are going to make people aware the risk of the market, the opportunities of the market?
So one is that when you are talking of SEBI, only SEBI's thing, then I think it may look small. But if you see the overall spend of the SEBI ecosystem, because this investment awareness has been done by several market MIIs as well as market intermediaries. So it's a much more widespread because of the reach that they have, because that more touch points you have, the more, investor awareness you can do. You can do campaigns, but you are also doing a lot of intensive, investor service centers across the length and breadth. But I recognize that SEBI also need to step up. It will not be enough for SEBI only to ask its intermediaries or MIIs only to do that, and we may have to step up our own efforts directly. And I think we will give our concentrated effort. But what will be more material for us is that whole SEBI ecosystem in particular, but in general, even, all the regulators together can do a much more important campaign on investor awareness in terms of what, how you can diversify, what are the do's and don'ts, what not to do, and also, how the speculative activity is not the, motive for long-term investing. So these things, I think, will have to craft in a more, I would say, more creative manner, in a also more accelerated approach to our own effort for, I think we need also to increase our presence. I think to some extent physical, our footprints have gone down in the last few years. We have to probably ramp up. We have to have review, because for whatever we might say about the electronic campaign and so on, but there is also a lot of merit in being there on the ground. And India is a vast, diverse country, and lots of investors are now coming from smaller centers, tier 2 cities, tier 3 cities, even in villages, in different pin codes. Now I think just for a maybe two digit code, barring that, all of the pin codes, investors are now investing in remote corners. So of course we have also expanded a big reach digitally through mobiles and others, but still, the investor education sometimes may need all these, through different touch point, through different investor awareness program, to train people in physical formats. We need to, for example, get into the schools and colleges. NISM has got a very important program to reaching out to the college students and working it out, because they become, first time investors and they start learning. So we have to even start early with the schools. So therefore that kind of thing, which will require a much more concentrated efforts, and we will get into that.
So you will expand the branch network, SEBI's branch network, because that has really gone down, as you pointed out.
I think so. In what way we will do that, it's there, but our footprints on the ground need to be expanded. That's my, because I've gone around and seen and talked to the people, talked to regional offices. We need language specific, people who are going and talking in their own languages. Is not enough to. So how we do it is that
Right.
we'll have to find out.
Sure.
Because we also need, language knowing people, that, if you are operating in Odisha,
Right.
so Odia knowing people to interact, because that's how you communicate much better. So we have to find out, but we have to also have the other capabilities today of digital translating and other things also to make a difference. But many a time we have seen interpersonal efforts are required, interpersonal things are there, specific, even if the digital programs are there, they have to be in the languages which the people do understand, which will actually do a far better job of investor awareness. So we have to intelligently recraft our strategy.
Sir, SME fundraising is a key issue, but in recent time we have seen that lots of bad companies entered in the market. They raised the fund and misutilized it, and it looked like they had a plan to fool the investors. So how you are going to balance the fundraising need of SMEs and also protecting the retail investors? Any rethink on the SME IPO regulations?
See, one of the objectives of SME IPOs was to enable because there's so many SMEs that we have, in order to ease the access of SMEs to the capital market. That was objective, and therefore we went for a relatively lighter touch regulation. Also went to, they could only go through the exchanges, and not necessary to approach SEBI for clearances of IPOs. And in between we had some, we saw some of the issues arising out of it. So there were a change in regulation in terms of who can access it. We tightened a little bit for purpose for which it can be deployed, how much you can use it for general corporate purpose. I think there the role of merchant bankers is also important, because to some extent we find that the cost of raising fund is just a bit much higher. Like if you are raising this, what is a proportion of your fund is as a cost of expenses.
Right.
Normally you will see if you raise larger fund, your cost will go down. That's a normal phenomenon in any bulk whenever you do. But we also need to see how much also they can afford in terms of the cost of raising capital. That apart, I think we have to be constantly watchful on this. If we find that, because there's certain, as I said, that certain measures were taken to tighten the situation, so we will be watchful as to how that pans out. Our point is that disclosures are important. People should look at disclosures. When you do investments, then investments you should give, because so much of information is being made available to you, then you should be watchful. And thirdly, you could always, the investors must also see how you are putting the money and diversifying, and not really trying to put the money in just a few, only on the expectation that the returns are temporarily, they look very attractive to you in terms of capital gains, but they may actually not be true, because if you do not watch the performance over a period of time in terms of real activity, what's happening there. So slowly you have to build up your trust on those companies, and also watch the companies over a period in order for them to ramp up investment. So I think a lot of people have been misled by the wrongful advice, also because there are people who are perpetrating these kind of advice, of which we are going against them. The influencers who are not qualified to give such kind of advice on specific stocks, and also about assuring some returns. And I think we have also have some egregious cases in that, where we found that there was a tendency to pump and dump, but these are the cases that we will come very hard if we find any such thing.
But the regulatory purview will continue to be with the exchanges, not with SEBI. For SEBI,
as I said that we will be watchful. If we find that this will requires a relook, we will revisit it in consultation with industry.
So another question on retail IPO. The quota of 35% was fixed long back. Because lots of retail investors have come to the market and the size has quietly grown up. Any thought on reviewing it?
Well, I think this is in terms of the review that we are doing of various regulations in consultation with industry, where public consultations will also be done. I think we are open to looking at it, whether it is right thing to do, whether we continue it like the way it is, or will it require a modification. So it's a part of relooking that we, as I said, that we will undertake. But we have not formed one opinion, specific opinion about this matter yet.
So this will be put up for public consultation?
Yes, it will be reviewed and we have PMAC, we have SMAC, and we have IPAC, different committees are there, and they would also look at this, and then we have consultation papers. So it will we will have to churn it and we'll bring it and with look at the data, whether this is, exactly is it the right way forward or is it the good enough? So we also sometimes don't need to destabilize any situation for the heck of it. So if we have a problem, if we have any issues, then we can look at it. If we are comfortable with something which is already stable, the market is stable, then we can continue with it.
Sure. There is a demand that some section is asking that the retail quota in larger issues should be reduced.
That is what I'm saying. In that context only I replied to you. So we have we are relooking at that matter in terms of simplification, in terms of making changes, contextual changes. So if we find that there is a rationale, if we find that there is a larger support for it, we can go for that. So it's difficult for me to comment and prejudge an issue before it is actually done.
Fair enough. So at some point in time, SEBI was contemplating a fractional ownership of shares, and that required changes in the Companies Act to be able to effect that. Is that something of immediate priority? When is it likely to happen?
No, at this moment, this matter is not on the table.
Okay. What about T+0? There was a time when this was introduced as an option. Of course, it continues to be an option, but it's, as an option, people don't really take to it unless you say this is the only way and there's no other way. People won't take to it, and it has not really taken off. Is that something that has been sort of put aside, or is there going to be renewed thrust on T+0? Because when it was talked about, the next step looked like instantaneous settlement. That was also talked about. So what's your view?
Well, it was intended to be optional.
Right.
So we, continue with that intention.
Okay. So it may not take off in a big way, which is okay. You're happy with status quo.
We have to see when the right time is there to do it. I think we have taken a very big step forward on being the first jurisdiction to bring T+1. US has followed suit. Many other jurisdictions are still wondering how you have been able to. Many people were asking me questions in ISCO meeting. How did you do T+1? We are struggling.
Right.
So therefore, it's like, technologies will keep developing, systems will keep developing. We have to just keep in mind the whole need of the whole system. In our thing, there are domestic investors, there are FPIs, there are custodians, there is also people there. We have different time zones also. The certain decisions are taken elsewhere, and then funds have to be moved. So we need to really keep in mind everything, because the entire ecosystem should be good enough. It's not enough for me to put something and then not be talking about how the custodians will do it, how the others will do it, how the banks will do it. So we need to really understand all those things and say that before we make it any mandatory. We must be clear that the ecosystem is getting ready for that, and we are not the only one who are there. There are others, and everyone has IT systems, everyone has other things. So I would say that technologically we have been able to sort of demonstrate that how it would be possible to do it. So that is a learning. There are several learnings while you are doing, even in an optional side. But in order to push to any further, so I don't think that is a matter of priority for us at the moment.
Fair enough. So there is one criticism against SEBI, which is that cases remain open in a sense for a very long time, many years. So they get revisited after a hiatus of many years. Would you relook at this in terms of what is the timeline for any case to sort of stop and not go back to?
I think that is a bit of a dated information, because a huge amount of improvement has taken place. I just had a data where I found that there is very little. There is in so far as cases is there. Earlier there used to be a lot of cases, 5 years old cases also. There's very little. 2 to 5 years, mostly it is falling within 2 years now bracket. And investigation, it is all getting completed in less than 2 years. So there has been a lot of improvement in terms of case delivery. We intend to further add resources in our system in terms of trained manpower in order to handle those cases. So we will add the resources rather than letting it slip further. We will see that, and it will also mean that we'll continue to investigate on a much larger scale. We will also continue to do surveillance and supervision on a more intensive scale, which means that if the more cases are generated, but we will also sort them out in a much quicker manner, which also means that we will add resources and we will also add capacity to these resources to do it, faster, better.
Will there be any hard stop on cases?
No, there will be no. No, there will be no hard stop on cases. As I said, that we just add capacity and resources in order to do things faster. It's like saying, if you want to do 3 programs a day, you have to add,
so many more people.
So many more people.
Okay. Any additional surveillance tools that you are looking for, essentially to, for example, wiretapping? It's something that previous SEBI chairmen have talked about. I mean, this is something that could give you an edge when it comes to investigation. Is there anything like that that you would push for?
I think, whatever means we have, we like to really optimally use them and add resources to do it. So I'm not the one where saying that we will just keep on looking for more powers. We can get the authority and do it. I mean, the question is, we need not have all the authority or all the things. It's for, of course, the parliament to decide, the government to decide. But whatever powers we have, that can be effectively used. I mean, that should be our first priority.
Do you think it is not right now?
Which one?
You think it is not being optimally used right now? The powers that SEBI has, there is scope for a lot more to be done.
Optimally used, as you said, that the number one, that how you may have lots of information. So if you improve your tools, so you can have better alerts. Then if you have alerts, you can have better resources to come on. So you can have a processing tool around it. And therefore you can process this faster and better. So if you really quality of our orders, you may have noticed that they are able to do a far better analysis of movements, maybe how the funds have moved, how the people have defrauded. So it's that effectiveness I'm talking about.
Sure.
I think there is still scope for further development of those tools, which we'll constantly do.
Sure.
Of course, you get more powers, that makes it easier. That is another way of doing it, So powers are, but then whatever powers we have, we can always make use of them better in terms of, adding resources and better tooling. And so a lot of AI is used now in SEBI, and a lot of we've developed our own tools to do that. So that capacity to develop the tools, both IT and human, is important.
Sure.
And we'll continue to focus on that.
Coming back to market manipulation and the surveillance thing, so there was a proposal of unexplained suspicious trading activities, which was proposed to deal with the cases where SEBI does not directly have evidence against someone. But this proposal could have, if cleared, could have empowered SEBI to take action in that cases. So is that proposal still on the table?
It is not on the table because there were certain concerns about it in the board. So it was like putting an onus on the other. And whenever you shift the onus, it's a very big thing in our law. And normally it is for anybody who is prosecuting to prove that you have done such and such thing. When you shift the onus, it becomes an onerous law. So, I mean, therefore, I mean, we have to also see the balance, the rights of privacy, the rights of personal rights, you know, your rights of liberty with the rights of investigating agencies. So let us not, you know, we have to be very clear that we are living in a democratic place where we should know exactly the powers have to be, not to be abused sometime. So that this power of abuse will also be kept in mind while people agreeing whether it should be supported or not supported.
Sure.
So at the moment, I don't think that we should pursue. There was a thing and it was discussed, but it was not accepted in the board. So we'll rest it there at that, and then we'll see if there is a time when with proper modifications or others. But right now we are not pursuing it.
Okay. So there was this announcement in budget 2021 of Unified Securities Code. So what is the status now? I believe SEBI has shared its views on the regulation, proposed regulation. So what is the status now, sir? When can we expect?
I think that is a question you have to ask to Department of Economic Affairs. This is with the government, you know, and the DEA will be the best, you know,
so there were
department to answer. Yeah.
So there were differences with respect to how many board members government should appoint and how the funding should.
I'm not aware of these differences or similarities.
So one very often asked, and everybody wants to know, when NSE IPO will get clearance and what are the hurdles that SEBI feels are there and that need to be solved before we will allow them?
I think I have earlier publicly spoken about it. So at the cost of repetition, I will again say there NSE and SEBI are under discussion on some of the key points which are relating to that in the case of governance, technology, litigation and clearing corporation. And hopefully they will be sorted out in a clearly, you know, with a clear roadmap, and then I think this issue can go forward.
So about demerger of clearing corporations, there is a view that demerging before making them financially viable, is it a good idea?
I'm not really getting into that here because we are not any prejudging the issue. There have been a paper which has been put out, you know, by SEBI itself on November 24 about, you know, what is the possible roadmap it could be, you know, and then secondly, the NSE has also given a viewpoint. So we have to examine it and work it out, and then we can, I can't really in the media say that this is my opinion or that opinion. This is a very serious issue which we have to apply our mind from the point of view of system stability going forward, what should be the case, what risks might emerge, because NSE and NSE and BSE both, they are, of course one of them is listed already, but they are very important MIIs, and to that they have a public utility angle. They are systemically important institutions. So while they are commercial, you know, they are, you know, because basically they are commercial entity. That is our unique model. So they are not for profit entity, but commercial entities. But there is also a public utility angle in terms of providing, you know, the infrastructure to, you know, it's a marketplace. And so therefore the regulator has to see, for example, we have public interest directors there, PIDs, and they do not require shareholders' approval. It's precisely because, you know, the public interest directors look at the public. So it cannot be always shareholders' interest in terms of, you know, market making or, you know, commercials or profits. So these are the angle they come into this. They are, as compared to other companies, normal companies. That is why this IPO, you know, the issue is taking more time. But I hope that we will be able to resolve it and move forward.
So ease of doing business is a key agenda of the government and also of SEBI. So, have you given any timeline to the departments within the SEBI, like in which timeline they have to review the regulation and come out with what needs to be eased?
I have said that, in the very first question I answered, that, this is the optimum regulation that we are looking for, which also means that, and keeping in view the cost of compliance, cost of doing business. So anything what we do, we would like to see, that whether this regulation is, can be done better, because there would definitely be any regulation, anything will definitely add compliance. The question is, what are the least cost option for us? What are the alternatives? And do we add, can we do away with certain micro regulations? Because in that case, we will concentrate on regulations which are truly which mitigate the risks in a very focused manner. So it is a question of, how you reconcile these objectives, both the objectives, and balance it. And every department of SEBI, in their own respective regulatory area, will engage with in fact, they have started engaging already with their associations, respective stakeholders, and preparing, what might have, and then, there would be consultation papers, and there will be a public comments will also be sought. So that more transparently we are able to say is what are the areas, what are the things we can, so there are some regulations we can rewrite. For example, 24B in mutual funds, we are reviewing, how we can make it better. So similarly, there are others. So that's an exercise we intend to do.
Make it better in what sense?
And I don't make it better in the sense, as I said,
24B, what kind of change?
Equally effective, perhaps more, with less cost of compliance. It's like your own spring cleaning if you do. Many a time, if you have to organize your place, you will find that something which you will dispose, something you will rearrange, and your room will look better. Cleaner, broader, wider. So this is exactly what we need to do also.
Sure.
Of course, it is a continuous process, but sometimes if we are giving it a focus now. We are giving it a focus means that everyone is trying to sort of do it जैसे दिवाली में करते हैं.
Right. So with respect to mutual funds, the TER regulations, I mean, SEBI was reviewing it. What is the status on that?
About TER?
The total expense ratio for mutual funds.
Total expense ratio, we have an upper cap there. But normally we have got upper cap of TER in several other places also. In the debt security is also there. It is there in case of brokers, margins. But not necessarily that, that upper ratio is kept. Sometimes it is much lower than that. Like brokerage fees, some of the things may be giving zero brokerage also, fees. Although we may have said it can't be more than 2.5%.
Right.
In debt we would have, say 2%. It may be, it may be less than even 1%. So that is a cap, upper cap.
No, I'm asking, this was to be reviewed, this almost went to the board but didn't get announced. And then, the previous chairman had said that SEBI had asked for additional data to review it. What is the status of that? Is it still under review, or are we happy with status quo?
No, till the time it is reviewed, it is status quo.
Okay.
Sorry to disappoint you, but that's the way I would
review,
put it.
I mean, if it's review means a change is coming, status quo means no change. That is how we interpret it.
I think I have put it as a general review for everything that we do. So the question is, the timing wise, it is not a specific thing. If you are contextualizing thing, this thing keep emerging. But right now we are together, everyone together, like as an institution, we are trying, let's do a major simplification of our regulations. So that exercise we are trying to initiate. We have initiated, in fact, And going forward, we will identify. So what will know? It will actually throw up. Here are the pain points. Here it is not necessary. Here you can do better. Here you can write things better. And then you have to bite in different pieces, because everything will then otherwise gale mein atak jayega. So you have to put it in the chewable thing, and then put it in the form of regulatory changes. But they should add up to an objective. An objective is optimum regulation.
Sure.
Somewhere the optimum might say that, look, this one is too loose, it should be made tighter, but rest of the stuff can go.
Fair enough, sir.
So, but it is very difficult for me to give you all the concrete example before the exercise is actually gone way ahead. Once it goes ahead, we will have an idea which regulations, these are the things that we can actually do. Right now, I am only saying as a principle, we are going for optimum regulatory principle. And my belief is, and whatever inputs I have got from the people, that there are definitely chances for many opportunities for reform.
Just a couple of questions, sir. One is, what is your big message to investors? And secondly, where are you investing? What is your preferred choice of investment today, investment product?
No, we are not supposed to invest in markets. So, and secondly, investors means wise investing, long-term investing. But capital market is important, and you should do the asset allocation in a wise manner, suited to your needs. Your needs are your needs. You can assess them better and take a proper advice.
Sure. Thank you so much, sir.